What's going on, my fellow wealth creators? Matty Ice here. In this video, we're going to have a conversation about personal finance, infinite banking, one of my favorite topics, and how you don't need to be rich in order to start infinite banking. In fact, I would argue that the sooner you start implementing infinite banking, the faster you'll get rich, whatever that means for you. The faster you'll reach your financial goals, because it truly does help accelerate the wealth building process in our lives, guys. This thing is incredible. How do I know? I've been implementing it in my own life for the past year, and it's been an absolute game changer. Not just for me, but also my family, loved ones, those closest to me. As an example, one of my I would consider one of my best accomplishments as a son was I was able to consolidate all of my mother's credit card debt, $12,000 of credit card debt, and it put $800 a month back into her pocket. It sent her credit score through the roof, at least compared to where it was. It's over 700 now, and she also doesn't have this $12,000 of credit card debt that she would likely never ever pay off as she approaches retirement. And now all she does is pay a little bit every single month to the policy loan to pay it off. That money is instantly available again to use for an emergency, investment opportunity, whatever. And it's just like the personal satisfaction that comes from that is just like incredible. I can't even, it's hard to describe. But I'm also talking to my brother about it now. I've had lots of friends reach out about it, and it's just having this massive ripple effect. Like it's provided so many benefits in my life, but also it's having this ripple effect for other people. Like just getting people to ask questions and like, is there a better way to do things? Tell me a little bit more about this policy that you set up. What, this private lending that you're doing. Like, I started doing that as well. But what I realize is that, and this came from a piece of content that I was watching earlier. I think it's important that I share this as well. There's some important lessons in this, at least there was for me. And, it was from this real dirtbag, just a scumbag guy, in my opinion, to be quite frank. And he was bragging about how he pays $95,000 a month for his fancy LA mansion, drives all his Lamborghinis and stuff. And you're just kind of a piece of crap if you don't have enough money in your bank account to afford his $3,000 course or whatever. Just a real low life, in my opinion. But what I realized was, this guy has all this money. He's rich by society standards, and I would think you should be happy. It just goes to show that money doesn't buy happiness. The fact that you have to get on social media and berate people and just disrespect them, call them a piece of crap because they don't have a certain amount of money in their bank account. Like, what the heck is wrong with you, man? That's a lot of internal issues going on there. All right. But it got me thinking about my situation where I'm not rich, but I have financial freedom. Because my definition of financial freedom is having enough passive income coming in to cover your expenses. Like if you get to that position, you're doing pretty good, in my opinion. Even if you don't have millions of dollars, or you're making $1 million a year or whatever, I'm not making a ton of money. I do okay, but my business reached the point where I have enough passive income coming in every single month that it more than covers my expenses. And the freedom that you get from that, like the peace of mind, like not having to worry about how am I going to pay the bills and stuff like that. Like it allows you to focus on more productive things, like I'm building my YouTube channel. It allows me to focus on building the Millennial Wealth Creator YouTube channel and brand. And I can do that productively, peacefully, right? Without having to worry about where like how the bills are going to get paid. But I was thinking about this. How I connected like having financial freedom without being rich, and actually achieving that definition of financial freedom can actually help you get rich, because now you're in a much stronger financial position. And I could start to put money to work. Maybe I put it into a policy to start infinite banking, which accelerates the wealth building process in my life. So if I focus on achieving financial freedom first, I can actually get rich. I don't need to be rich to have financial freedom. I guess you could argue that, if you have that financial freedom, some people would say I'm rich, right? So everybody's definition is a little bit different, but I was just like connecting the pieces here where financial freedom can help us get rich, not the other way around. And then we don't need to be rich to do infinite banking. In fact, it's the other way around. If we start infinite banking, we could actually reach our financial goals that much faster, right? So it's just a really a good light bulb moment, just kind of this epiphany that I had that I wanted to share with you guys. Just a different way of thinking about things, different way of thinking about money. I would say that's probably the most profound thing that's happened to me over the past year as I've gone down this journey, is the mindset shift around money. and just starting to reject some of the garbage, like a lot of the garbage that we're fed by mainstream financial media about money that really is rarely in our best interest. It's usually in the best interest of Wall Street, government, financial advisors, and professionals and stuff like that. Where they want us to hand over control of our money. We don't. I don't know anything about investing. I don't know how this 401k works, IRA, whatever. You guys manage it, and then they make their billions and billions and billions of dollars in fees over our lifetime. And not that there's anything wrong with paying fees. I did a whole other video on that. But my point is the mindset shift that happens, the paradigm shifts that happen as you start to go down this journey, I think are some of the most important parts. So I wanted to share that with you guys. That was the inspiration for the video. Let's get into the three main things that would let you know, I guess, just to indicate that you're ready to start infinite banking. Is number one is cash flow. Okay, this is actually step one in my Millennial Wealth Creator Blueprint. Talk about it in the university, and it's to focus on income first. See, I think what we're taught by financial media is mainstream financial media is we always put the cart before the horse. Like we start investing in the stock market, our 401ks, all these outside product, we start making investments outside of us, and we're putting all of our faith in these financial products to achieve our financial goals. So in 30, 40 years, we'll finally be rich, right? We'll finally be able to live the life that we want, okay? And I just reject that 110%, dude. I think that is just completely wrong. I think we need to focus on income first, because if you're not able to save money every single month, that's just a problem in and of itself, but you certainly can't implement the infinite banking concept. You have to be able to save money. How do you save money? You make more than your expenses. Income is way more than your expenses. All right. Another thing, obviously, is having your expenses under control. Are you spending more than you make? Well, you should probably fix that. That's a whole other problem that you need to get resolved first. But one of the ways to do that, though, is to focus on increasing income. Now, the question is, how do we do that, right? How do we increase our income so we can save more money so that we can take advantage of this really powerful strategy here? Okay, well, for me, in my experience, as I've reflected on my journey, the best way to increase income is to increase skill set. Increase the value you provide to the marketplace, whatever that is. All right, increased skill sets could be getting better at what you currently do. Is there continuing education that you can do? Is there more that you can do at your job to stand out above the crowd, to stand out above everybody else, and potentially and give you the leverage you need to walk into your boss's office and demand a raise because you're being courted by 2 or 3 other companies because of how amazing you're doing at your job because of your increased skill set, right? It could be a new skill set to start a side hustle. It could be, maybe something AI, video editing, whatever. There's lots of really high value skill sets that you can learn. You just have to figure out what are you passionate about? I mean, you don't have to be 100% passionate about it, but you got to be at least interested in it, right? Another way is start sharing your journey, guys. Everybody's an expert at something. Think about this. Think about the problems that you're trying to solve in your life. All right. And could you maybe share your journey on how you're solving that problem? I just spoke to a gentleman at the gym today, and he's lost 50 pounds in 2 months. Almost said 2 weeks. That wouldn't be good. But 2 months doing intermittent fasting, changed up his diet. He's been working out, just really inspiring. And I told him, dude, are you sharing your journey? Because that's a really inspiring story. Not to mention that's potentially a multi-million-dollar business as well. Because what happens is when you start sharing your journey on social media, it could be a YouTube channel, it could be a podcast. You just got to figure out what your channel is going to be for sharing your journey. But talk about the problems that you're solving right now. You don't even have to have them solved yet. This is exactly what I'm doing with my channel, guys. I'm just sharing my wealth building journey. That's it. And it's slowly turning into a business. It's the same thing I did with my marketing agency. I just turned on the camera and started sharing my journey, what I was doing, right? And you don't even necessarily have to be on camera. Maybe you start a blog. Maybe you're a better writer than you are talking on a camera. Just start thinking about these different things. What are you an expert at? What problems are you solving in your life right now? What's something new that you learned, right? Can you help other professionals in your industry? Maybe you start a side hustle, just getting your own clients. Start to think about that, because that can significantly increase your income, which can significantly increase the amount of money you're able to save. So then you could put some of that into a policy, because you got to be able to save money on a regular basis, guys. And here's another important part about increasing income is as your income increases, Do not increase your expenses. Don't go out and on these fancy vacations and go buy the new car, the new house, the new apartment, whatever. No, for the next 12 to 18 months, just stack cash. All the extra money that you're making, just put it in a savings account. All right. And eventually, because this is going to lead me to the second thing that will determine if you're ready for infinite banking, in my opinion, because I've done tons of videos on why dividend paying whole life insurance is far superior savings vehicle than traditional savings accounts. However, when you're building up your vault, we don't want to necessarily put that money into a policy just yet. We want to save up enough so that we can front load the policy. That's really part number 2 here of being ready for infinite banking is, are you able to put more money in the first year than what you're going to pay in premiums for the following years? Okay. And I'm going to show you an example of this here in a second with an illustration. Actually, you know what? I'll just go ahead and pull it up. It'll probably be easier anyways. Let me share my screen. All right. So this is actually my brother's illustration that I put together for him. It's not set in stone. We haven't even put an application in yet. We're just in discussion about it. And again, you can see here, like, we're not talking about tons and tons of money here. He has $30,000 that he saved up in that he has in a CD right now that we're talking about moving over into a whole life policy because you get so many more benefits. And it's just a very efficient savings vehicle. So if you're going to save money, why not save it in the most efficient way possible? And he has good cash flow. He's not rich by any stretch of that definition, whatever that might be. Okay, but he has a very good skill set. He's very good at what he does, so he makes okay money, and he's able to he makes more than his expenses. All right, so he fixed that problem first. He got that done first. Okay, good income, good cash flow, able to save, check. Now that he has that, he's able to start making strategic moves with that money to accelerate the wealth building process. All right. So in this particular illustration, this front load, okay, step 2 or part 2 is, you see here, he puts $30,000 in the first year and then $6,000 per year after. So he put a lot more in the first year than he is on the following years. This is called a front load or a dump in. There's different terms for it. But I definitely recommend having enough savings to where you could front load the policy, because it basically supercharges the policy and gives you access to a ton of cash value in the first year. You can see here, by the end of year 1, he has access to almost 28,000. He put 30 in and he has access to almost 28. This isn't your traditional whole life policy that maybe your grandparents have. Okay, we're talking about high cash value policies here. When you design them correctly, you can get access to the majority of your money within the first 30 days, and more of it comes back to you over the course of the year. So within the first 30 days, you'll have close to about this, probably a little bit more than the 26.9 here, but pretty close. So, we take a little bit of a hit in the beginning, but it's because we're buying life insurance. It's not like our money just disappeared, right? We're getting a ton of benefits. We're capitalizing our private banking system. There's a little bit of a cost to that, but eventually that's going to come back to us. We're going to break even. We're going to have way more in cash value than what we put into the policy. If we scroll down, I'm not going to get into the entire policy design. I've done other videos on that. I'm talking about the front load right now. When he stops paying into it, which we have it set to age 75. You don't have to do that. All right. But, he's put in 262,000 and he has 662,000 in cash value that he can now tap into for retirement income. He could turn this dividend into tax-free retirement income paid in cash up to his basis, up to his principal here. Like, there's so many benefits, so many options. But when we front load the policy, you can see we get access to a ton of cash value in the first year, within the first 30 days. And that helps to serve as our emergency fund, our opportunity fund. Maybe you're going to consolidate debt with it. Maybe he funds this. All right. Let's say he's got 27,000 in cash value. Maybe he's got, which he doesn't. I'm just giving an example. Maybe he has $10,000 of credit card debt that he's paying 25% interest on. Well, now he's got the money in this policy. He could borrow at, I think it's 7% for this particular company right now, the policy loan rate. But he could consolidate all of his credit card debt. Like, there's so many different ways we could utilize this, which we'll talk about here in a second. But front loading policy supercharges it. You start getting that uninterrupted tax-free compound growth on a much larger number. which is going to accelerate the cash value growth over the long term. So uh, that's part number two, being able to, so you have enough save, you increase your income so you could save enough for the front load. You dump that into the policy to accelerate the growth. That's part number two, being able to front load the policy. And then part number three, real quick, would be mindset, the mindset shift around money and what we're doing with this. I've done a lot of different videos on this, but the mindset, like for example, when people see this, oh, I'm going to get a bill for $6,000 per year. No. First off, he's not even on the hook for 6,000. This is what he can put into the policy every year if he wanted to. He's actually only on the hook for about 2,200 per year or 2,000 per year in this illustration. But here's the thing. Again, the mindset shift. We're not paying a bill like we would with our car insurance or our cable bill, where that money is gone forever. No, this money shows up in cash value and is immediately available for us to access in the event of an emergency, wealth building opportunity, debt consolidation, whatever that might be. So we need to shift our mindset about how these policies work and what we're actually utilizing them for, guys. Like I said, I've had so many paradigm shifts. Maybe I'll put a document together for you guys and like all the paradigm shifts that I've had that, maybe it'll help you as well. If you want me to put that together, drop that down in the comments and I'll put it together. But yeah, shifting the mindset about like, this is not a bill. This is a deposit into our banking system. Not to mention, by year 5, look at this. He's putting $6,000 in, but his cash value is growing by about 7,000. Well, that's like being at an ATM. You're going to deposit $100, but in your account, you have access to $110. Like, how many $100 bills would you want to put into that ATM? A lot, right? And it just gets better and better every single year. Look at year 10. You put $6,000 in, it grows by almost 8,800, right? So it's getting more and more and more efficient, right? And that's why the mindset shift around this is so important. And just to wrap up here, guys, a couple of things like utilizing the policy without being rich. Like I said, consolidating debt, maybe have a lot of credit card debt or just maybe student loan debt, whatever. You don't even have to have all of the money in the policy to consolidate all the debt at once. You could fund the policy like this, and we could take chunks, maybe $20,000 chunks, put it towards these debts, and then we funnel that cash flow that's freed up. So let's say it frees up $1,000 a month, like it's going to do for my brother using his HELOC with Velocity Banking, right? Instead of increasing expenses with that $1,000 a month that you now have freed up, going shopping, like it's not a permission slip to go shopping. We're now going to funnel the money you were paying to the credit card companies, to the student loan company, the bank, whatever. And you're now going to funnel that back into your policy to pay the policy loan down. And as you do that, that money is immediately available again to use the next month or the next year, however you set this up. Like you're starting to recapture all of your money, or a large portion of it. Like, we do have a little bit of simple interest cost here, but it is a very small price to pay for this strategy, guys, for the control that we get back. So we can use it for consolidating debt. Once you free up what you're paying in debt, what is that going to do for your finances? Like, think about that. And we have all this money freed up. How do we put that to work? Like different investment opportunities. Maybe you start private lending like I did. That's been a game changer. My favorite wealth building strategy right now. Purchasing vehicles. I talked about this on my channel. I used my policy as my very first policy loan. I purchased my vehicle with it, and I've recaptured, like I've run the numbers on this, like over 50 years, I put like $200,000 back into my pocket over 50 years. Like, and you think about how many large capital purchases we make in our lifetime and how many vehicles we purchase. And it's because we're eliminating lost opportunity cost with these policies, with this strategy. Because when we use our policy to do something like purchasing a vehicle, our money is still in the policy getting that uninterrupted compound growth. Okay, we use the life insurance company's money to purchase the vehicle, then we just pay down the policy loan like we would a normal bank loan, right? And yeah, we pay a little bit of simple interest, but it's nothing. I mean, nothing compared to the compound growth that we get over our lifetime, guys. Covering emergencies is really powerful because, again, if you think about like the savings that you have in a checking or savings account, like what is that really doing for you? It's probably earning a little bit of interest right now, but you got to pay taxes on it. And historically speaking, savings accounts don't pay really good. CDs don't pay really good. right? So you can't really depend on that long term. Not to mention, there's just so many more benefits of the policy. So why not have our emergency money in a policy where that money is just it's working for us, it's growing, it gives us the death benefit, the living benefits, like, and we have access to it whenever we need to, no questions asked. And then when we use it, our money is still growing in the policy. When you empty your savings account for an emergency, how much interest are you earning in that savings account now? Zero. That's called lost opportunity cost, guys. When we borrow from our policy to cover the emergency, our money's continuing to grow. We just put the money back into the policy over time on our own terms, and we completely restore the cash value when that's paid off. Yet our money continued to grow the entire time. Like, holy smokes, it's so freaking powerful. How about helping to pay for college? I hear lots of people talk about like 529 plans and stuff. I'm like, since when did like why is it so popular to rely on the Wall Street casino for everything in our lives now? Like, why is the stock market the go-to for all of our wealth building opportunities? Like, how do you know the stock market's going to do what you need it to do over the course of 10 years, whatever, for a 529 plan, right? What if your kid doesn't want to go to school? What happens if the market tanks right as they go to school? Like, and how does that impact scholarships and what is it, financial aid as well? Like, those are things to think about. Well, policy, and I've done a video specifically about how dividend paying whole life insurance is an amazing vehicle for saving for college. It's just awesome because, again, you can utilize policy loans to help pay for college. You pay those policy loans back. It immediately restores the cash value. All the while, your money continues to grow. So you've paid for college or helped pay for college. But then let's say over 10 years, 20 years, whatever, you get the policy loan paid back, hopefully sooner than that. But once you restore all that cash value, you now have like that cash value continue to grow. You can now use that for retirement. Can you use your 529 plan that you used for your kids' college education? Can you use that for retirement? No. Gone, gone, gone. Not with a whole life policy. That thing continues to grow as you help pay for college, and it will be there for you if you want as a supplemental retirement income stream. You have the living benefits, chronic, critical, terminal illness riders. You have the death benefit as well, massive income tax-free death benefit that gets passed on to your loved ones. Holy smokes, guys. Like, this is the most powerful financial strategy I've ever come across. It's why I'm so passionate about it. Like, there's just so many benefits. And the pushback I get sometimes, oh, well, don't you pay interest on it? Dude, cost of doing business, very, very, very small price to pay to get all of these benefits. Right. So I hope this got you excited. I hope it got you inspired to do what you need to do to get in a position to be ready to implement infinite banking. So to recap the three things. All right. Number one, increase income. You've got to be able to save money on a consistent basis in order to successfully implement infinite banking. All right. You have to get that. You've got to get your financial house in order first. Manage your expenses. Stop spending more money than you're making. Focus on increasing skill sets. Learn how to double your income or create side passive income that covers your expenses, right? Just get to the point where you're able to save money on a regular basis. Then part number two, as your income increases, do not increase your expenses, at least not yet. Okay. Focus on stacking cash, save the extra money. All right. Because that is going to be the front load that you're able to put into the policy when you're ready to pull the trigger. All right. Because that is going to make a huge difference on the growth of your policy over the long run. When we're able to front load the policy, supercharges it, you're getting compound growth on a much larger number, and you get a ton of early cash value. Okay. Part number two. Then part number three is mindset, guys. Start questioning things from the financial media to mainstream financial media. Start asking questions. Is what they're teaching me, is what I'm doing right now, is that actually the best thing for me to reach my financial goals? So start asking those questions, start having those paradigm shifts. I'll link some stuff down below once I put it together, just the paradigm shifts that I've had. Like, for example, another one is we finance everything that we purchase. Every even if you pay cash, guys. So we're either paying interest to somebody else or we're losing interest that we could have earned over our lifetime. That's the lost opportunity cost part of it. That was such a huge paradigm shift for me, and why it made so much sense to implement something like infinite banking, because I'm eliminating that lost opportunity cost now. I'm recapturing those dollars, putting that back into my lifetime over the course of 50, 60 years, whatever it is, right? So those types of paradigm shifts, guys, work on your mindset about money. Just start questioning things and do your research. All right. This is really powerful stuff, but you got to know what you're doing. All right. You don't have to be an expert to start educating yourself. All right. So anyways, I hope that was helpful, guys. Really appreciate the time. Any questions, drop them down in the comment section below. Make sure you check out the links in the description. Tons of additional tools, training, and resources to help you along your infinite banking journey. And I hope you guys are crushing it. I will talk to you the next one. To your success. Matty Ice is out.